Hi there folks, welcome to this week's weekly Forex Forecast. It's the 29th of November. Boy, we had a busy week last week. More about that in a moment. Now, in order to access this weekly Forex Forecast, head over to the forexsignals.com website. You'll see here, still actually running a Black Friday offer. You may want to take a look at that as well. 50% off any of our plans as well, worth looking at. Scroll right down to the bottom of the homepage and you'll see here all our free tools and so forth. You'll see here we've got the Forex Forecast. Click on that and it pulls up the forecast page. Now, if you want this sent directly to your email inbox, just fill in the details there in node fields. That way you'll get it the moment it is released. So as I said, a busy old week last week. And you know, the new corona variant basically rocking the markets. The Dow Jones, I think, was down about 3% on Friday. Oil prices were dropping like a rock as well. Everything was Armageddon in the markets. Bit of a recovery here today, but certainly was the main driving force behind the market. And this is having a knock-on effect into the currency markets as well. Those safe haven currencies, the low yielders, those that are less likely to move their interest rates anytime soon. Japanese yen, the Swiss franc, the euro as well, all came with some bids into the end of last week. And the safe haven currencies going stronger means that the high yielders, the commodity currencies, they were under pressure. You saw the CAD dropping off as oil prices were dropping. You saw New Zealand dollar, pound also coming lower last week. So let's have a look at what we're looking at this week. Looking at the Aussie against the Japanese yen, this has been in a solid downtrend for a while. Australian dollar has broken through some key levels of support down here. We're looking for a retest of that level of support, which should act as resistance for trend continuation lower. I can't predict what's going to happen with this new variant of COVID. All I can do is follow what the charts are telling me. At the moment, the charts are telling me this is trend continuation lower. So selling into the Aussie yen on pullbacks, making sure you got your stops in place could be the way to play it. Also looking at the CAD against the Swiss, the same theme behind this one. CAD's under big pressure at the moment as oil prices come lower. Swiss franc is seeing that flight to safety. So I'm looking at that, pretty much the same idea, broken through levels of support, back up to retest for trend continuation lower, making sure you got your stops in place as well. Max is also talking about the fears of COVID and the Delta variant. Dow Jones, he's looking for a bearish play in that. We are having actually a bit of a correction here this morning as we kick off the week. However, these corrections are often sold into. What I'll say is that the fear at the moment hasn't gone away, and markets do not like uncertainty. So maybe any pullbacks you're seeing in the stock markets would be on the same side as Max's call here for a bearish trade lower. I think it's going to be a week or at least 2 weeks before we actually have a full understanding of what this variant is all about. He's also looking at gold, slugging it out, and he's got a level there to watch not far from these levels, around the 1780 level. So that's basically the theme that he is looking at the moment. And of course, you can get what Mark is looking at, all his different analysis from the different currency pairs as well. So head over to the screens now. And we'll look at some charts, and I'll also show you a little trick that I use when I'm drawing support and resistance, and then we'll look at the economic calendar for the week ahead. Come on, let's go. Okay, so let's start off by having a quick look here at the faithful momentum meter. This basically tells me which currencies are strong and which currencies are weak. And as I have been discussing, what you see down here below the center line, you've got these three currencies. You've got the Australian dollar, which is the orange line. You've got the grey line, which is the New Zealand dollar, and the Canadian dollar, which is the purple line. These are the weaker currencies. These are the commodity currencies. These are the currencies that have higher interest rates on their bonds. And those are the ones that have been most affected by the risk-off theme that you saw because of the coronavirus variant. And the safe haven currencies, the low yielding currencies, the Japanese yen's up there, the Swiss franc's up there, and the euro has also been going from weakness to strength as well. These are low yielding currencies. These are the economies that are less likely to start moving their interest rates sooner rather than later. That's why you're seeing these go better and these commodity currencies go weaker. So that really is the theme, I think, that we have to pay attention to this week. So this is one of the currency pairs that's got my attention this week. It is the CAD against the Swiss franc. That's the loonie, Canadian dollar against the Swiss franc. I'm looking at this trend that you've basically seen on a downward spiral pretty much since around the 75 level. You'll see the moving averages have all been fanned out to the downside, had a bit of a pullback here, and then of course last week we saw this big move lower again. Now the week's kicked off with a bit of a pullback. I like getting into trends on pullback, and this one has got my attention. I would say that this level up here would be my level of support that's been respected, and this level, the new low, now we're seeing at about a 50% correction from that. I love trading the 50%. A lot of people think that's Fibonacci. It's not Fibonacci. Fibonacci does not have the 50 in its sequence, although it is a number that we like to use in retracements. This level now is about a 50% reduction. You're also seeing some bearish price action in here on the 4-hour chart. A bearish pin showing you that the pullback, the rally back has been met with a wave of sellers. So this one here has got my attention to the downside this week. Of course, where you place your stops, well, where you don't want to get stopped out, where you don't think you're going to get stopped out. And for me, this level of previous support, big level of support, bounced off it multiple times here on the 4-hour chart. That's going to have to act as resistance on the way up. So your stops are more likely to be above that level of resistance for trend continuation lower. And quite frankly, the path of least resistance is certainly lower. Looking down here on the daily chart, we've got pretty much fresh air all the way down to around the 71.80 level. So selling into pullbacks in the CAD Swiss has my attention this week. Make sure you do your own analysis. Okay, so before I get on to the economic calendar, I just want to spend a couple of minutes explaining a little trick that I find very useful when drawing your support and resistance lines on a chart. I get asked this question all the time, and indeed it can be quite ambiguous. But I do find that the best way to plot your support and resistance is to remove a lot of the noise. This is a 4-hour chart in the euro against the US dollar. It's a candlestick chart, which basically, as you know, shows you the high, the low, the close, opening, and so forth. But a far better way to plot your support and resistance, if you are struggling, would be to use the line chart. When you look at a line chart, it basically takes away the noise, takes away the highs and the lows. And at the end of the day, we're interested in who basically won the battle in a particular trading period. When you do that, it's a lot easier to plot your support and resistance. We're going to plot one in there because it's a big sort of V shape. It was respected there, it's respected there. Also, you've got a double bottom at the back here. We're going to pop one in there as well. There's going to be definitely one down here. That's the new low. And again, back up here. So these are the key levels. I also encourage you not to over clutter your charts with support and resistance. Maybe there's going to be one in there as well. Again, this is the 4-hour chart. If you are trying to improve your win-loss ratio, I strongly advise you do this support and resistance technique on the daily time frame, and don't take your trades through a daily level of support and resistance. I think that's a great way to improve your win-loss ratio. Let's back to the candlestick chart now, and you'll see exactly what it looks like. Okay, and it all becomes a lot clearer. So these are your levels on the 4-hour chart that we'll be looking at this week. You see price is actually stalling here at the moment. If we do break higher, then I'd expect to see some resistance coming in around the 1375 level up here, and so forth. Another way you can do it, of course, is to use one of our trading tools, which basically does all the work for you. Here it is. It is our support and resistance tool, available on MT4 and MT5, absolutely free of charge. If you want to come over to our trading room and try it out, you can do so. So basically, it gives you a little panel here. You can select what time frames you want to see your support and resistance, multi-time frames as well, so it's really useful. So I might want to put on the 4-hour time frame charts and maybe the daily as well. Daily's in the red, and if I merge these, it basically gives me the key levels. Again, it's picked up pretty much the same levels that I showed you a moment ago. Really, you can even put the weekly one on there as well if you wanted. There's a weekly level coming in there on the blue line. So really good way to get some clarity on your support and resistance if you're struggling doing that at the moment. And this is another example. This is the CAD against the Swiss. Okay, so let's just show you where the support and resistance lines are. Clicking on the 4-hour, maybe the daily. We'll do a little merge there as well. And it basically shows you the big levels, and you can see just by looking back how accurate that it has been. Missing the lows there just by a few pips, but great level of resistance where we are at the moment, and another level basically a little bit higher up around the 73.15. Great little tool. As I say, if you want to try it out, head over to forexsignals.com. So you can take out a 7-day free trial as well. Let's have a quick look at the economic calendar for this week. Okay, so if you head over to the forexsignals.com website, scroll right down to the bottom, and you'll see there, amongst all our other free tools and calculators and so forth, you'll see the economic calendar, Forex economic calendar. There it is, and it basically maps out what we've got coming out for the week ahead. I always like to look at the next 7 days. Okay, anything in red on the right hand side is deemed to be high impact news. Anything in green is low impact, and yellow is basically in the middle. Even if you're not trading the news, I think it's really important that you have an indicator like this, so you know basically when the big market events are likely to be out. You see, we've got a bit of PMI data out on the 1st of December. You've got Bank of England, Governor Bailey speaking. That's always a widely watched event as well. You've got ADP change in the US. Trade balance coming out of Australia later, so New Zealand later on in the week. What else have we got here? Not a great deal. We got some PMI data out. Oh, we got some Eurozone retail sales data out later on in the week. That's going to be really quite important. Obviously, retail sales is an early indication of what the high street is doing and people spending money. Is it inflationary and so forth? Certainly in the wake of the coronavirus lockdown, we'd like to look at these data releases as well. You've got Canadian unemployment as well on the 3rd, and the big event, of course, for the week will be the, I beg your pardon, we've got some PMI data out of the US, which is quite big news as well. PMI data is like a forward-looking indicator. It basically, it's a survey for all the economic business leaders and so forth. Are they getting optimistic about the economy and so forth? So that's going to be pretty important. I say we got some US employment data out later on the week. That is going to be important. That's the non-farm payroll. That's at the end of the week. You come and tune in live. We do trade a live event on that as well, alongside the Canadian employment data as well later on in the week. This is the biggest event of the calendar month, so be aware of it. If you want to find out what we're thinking, head over to forexsignals.com. Okay, so I hope you found that useful. As I said, if you want to make sure you get this economic forecast direct to your inbox every week, just fill in your details there as well and go straight to your inbox. We are still doing some discounts on the Black Friday. As I said, head over to Forex Signals and read all about it. Well, thanks for tuning in. We are streaming live around the clock, up to 6 times a day now. A new mentor coming on board as well from the US. So it really is a full-time effort now around the clock. If you want to take part again, head over to forexsignals.com. If that's not your thing, that is not a problem. I'll see you next week. Don't forget, we've got non-farm payroll at the end of the week.